Welcome to the section 4 of this course. In this section I will cover when to enter a trade, how to position the stop loss, and also what assets are the best for this trading system. In this video I will cover the buy signal. So we are going to start first with the crude depiction of the entry buy signal. As we discussed before, one of the indicators used in this strategy, it's a 20-day moving average, a 20 period MA. We are going to call it like this. This is on a daily time frame, and this is what we would like to see on the price section on the chart. After price crosses below the 20 MA and starts to rise again towards the moving average, we pay attention to the price. So next we want to see the price crosses the green line on a closing basis, and that means that the candlestick or bar closes above the moving average. Here we have it. So we want to see a bullish candle crosses above the moving average and it stays there, so it has to be closed. The market has to be closed, and in that moment we have a buy signal. In other videos we are going to see how we add the stop loss and when do we take our profits. But until then I would like you to go to the chart and find all the buy signals from 2019 until now, until the present. So I'm going to do this now. I'm going to go to the charts and show you a few of them. Here we are on the chart. We have here the S&P 500 index, the daily time frame, and this is the beginning of 2019. As you can see here, it's December, January 2019. We have the moving average here on the chart, and you want to see after the price crosses down below the moving average, so it might spend a lot of time there sometimes, especially in December. And then when you see the price going up, that's when you start to pay attention for the moment when it's going to cross above the moving average. And here we have a perfect example, because if I zoom in, you can see this green big candle that it didn't even cross the moving average and it didn't close above. So in this moment, at this moment right here, you do not have a buy signal. So you wait. The next day, you see the price crosses above the moving average and you still don't have a buy signal until the end of the trading day. So when the stock exchange closes, when this candle is closed, and here you have this sign, it says market closed. So you will see this in TradingView. Other platforms, they might have it or not. And I'm going to show you later how you can check online if the markets are closed or not. So this is pretty basic, easy stuff. So in this moment here, when the day it's over, you have a buy signal. After that you can see the market starts to go up in your favor and it stays there for a long time. Then again you see the market going down below the moving average, goes up, and here you have a buy signal. It goes up, it goes down under the moving average again. Here you have, so this is, it goes down but it doesn't close above, so you do not have a buy signal here, but you do have a buy signal here. And we are going to see that this one, it would have been a loss. But next you'll have again a buy signal. This is a pretty good entry. So you go in here, market goes up, and then starts to go down, spends some time in there, crosses above again, so you have a clear buy. So you see you don't have any signals in here, you have a signal here, it goes up, it goes up. We are going to see around here how to collect profits. It goes down. Here you have, it goes up, but then it goes down, so this is not a buy signal. We are going to learn about this. The candle that offers the buy signal has to be green, so this has to be a bullish candle. We are going to learn about that. You have a signal here, which is a loss, and then you have a signal here, which is a win, covers the losses. Around here you have a signal that fails, so it's okay. We are going to learn how to mitigate those losses, to make them smaller. Then here you have a signal, a buy signal, goes up, covers all the losses, and you have some wins. In here you have a signal, you see, it goes up. So even here you'd see it staying like that, and you'd pay attention to it to cover your losses, but it doesn't even look down. It goes up immediately. And it continues to go up until we have this period here where it spends a lot of time under the moving average. You do not have any signals. And then one day goes up, continues to go up, goes under the moving average. You have here a clear signal, it goes up. Here you have a signal, it goes up just a little. You'll have a small profit here. Another clear signal in here. So you see, this is a nice win here, goes up. And it keeps doing that. If you see it coming like that under the moving average, this is good because this is offering you many opportunities to enter. If it's above the moving average, you don't know exactly what's going to happen. So you see, even in 2021, there are a lot of opportunities to enter the market. And we had one just a few days ago. So this was a very nice opportunity. Goes up. So the first task that you have to do as a backtesting, I would like you to go back in the time since 2018. So from the beginning of 2018. And I want you to count how many times you have opportunities to enter the market. And don't try to count the losses, not yet, because it's not that easy. It's not that you are going to just count them. Some of them they can be mitigated. You can go out at a zero, at no losses, when you see some other stuff happening in the market. So I'm going to show you some of those secrets that come with experience. But from 2018, you just go around, spend some time here, look, and see how many opportunities to enter the market there are there. So you see, it's not too much. It's from here to here. You can go even more before that. You see. But I think a few years it's enough, because this is a daily time frame. So 3 years, 2 or 3 years should be enough for you to do exercise. So this is going to be the first exercise where your brain and your eyes are going to get used to those opportunities to enter the market. And by the way, if it's easier for you, instead of using those candlesticks, you can just use the bars. Okay, so maybe it's easier to see when you have that clear signal to enter the market and how it goes up and what it does. So this is how I used to do it. So I used to like those bars and maybe sometimes switch to see how the candles look. But when I see the signal, it was very easy for me to use the bar, because you can see the line closed above the moving average.